All right, guys, welcome to crypto live stream number 6. Pretty pumped. I'm starting to get in the swing of things for this one. This week's going to be a little bit more of a broad topic, kind of towards the end. I'm going to talk a little bit about crypto security and an experience that happened to me actually, if like last week. It was pretty scary. But we'll just dive right into the recap from last stream and what we've been mining. I like to start off the streams this way. So first off, Magical Coffee, he's migrated himself off of Twitch, which I think is going to be great. He's building some really cool tools that he couldn't build within the Twitch platform. So this is, let's call this a beta. He's still working on some of the formatting here, like this is getting cropped off right here. But this is going to be, I think, really cool. We're working with him to try to get some. I'm not quite sure. I don't want to really reveal any details yet on this, but I'm hoping we can get something on this page and work with him a little bit moving forward. So let's keep an eye on that. It's a great place to keep track of prices. I know the prices look like they're tanking here, but it's actually just Bitcoin doing really strong. All these are measured against Bitcoin right here. So Bitcoin's actually having a monster day, and the altcoins will usually follow. This is the Bitcoin USD chart on Coinbase here. So these other altcoins tend to either follow or precede. They don't really go up linearly. So we'll see what happens with the altcoin market. But today's a pretty good day for Bitcoin and therefore the rest of the world. So the first thing I want to talk about today is the last stream, the recap. So market recovery. We continue. Oh, I skipped ahead there. We continue our market recovery. Bitcoin sits at 5,500. Ethereum at 171. 2 weeks ago, it was, I want to say 5,160 something. So we're slowly keeping with this trajectory upward. Remember, I said the breakout date, or rather, a science guy on Reddit and a few others said the breakout date was April 24th. I think that's timed with the BAKKT, that exchange's decision. I haven't done any prior research to that. I'm not even sure if that's the right date, but I think that's what they were kind of tying it to. But let's see what happens tomorrow. We're already kind of bubbling up. We continue the bubbling up here, so we'll see what happens in the next couple weeks. Oh, yeah, that's what I wanted. There we go. So, this is something I wanted to talk about was, in addition to the market recovering, Bitcoin fundamentals, I think, continue to strengthen. This is Anthony Pompliano's blog. He does a podcast. I'll plug it later. And he has a blog. It's a great source for information about, I think, crypto in general, Bitcoin specifically. So he posted this. We're talking about we see Bitcoins continue to be released at the fixed rate. We see that the hash rate continues to go up. It's I mean, this was the big bubble, and while it went down slightly, it doesn't seem to be stopping at all. So this is the kind of metric that I use to determine health behind networks, is hash rate. So while you saw a 90% dip in price, the infrastructure running the network didn't see anything even close to that kind of dip. So I'm very, very bullish on cryptocurrencies. And I'll actually get into some of the reasons later in the stream as to why I think that in general, as it relates to decentralization and how it interfaces with our current legacy financial system. Miners are doing well, at least in Bitcoin. It looks like the transaction cost has gone down due to SegWit and Lightning Network. More transactions are occurring per day. What's this one? The number of people who have wallets that have been generated continues to go up. And it looks like we're going to start to see a little price recovery here. So, of course, I'm going to put everything in the show notes. You guys can take a look at what I'm showing you on the page here. But these are the kind of metrics that I think you should look at, not just with Bitcoin, but with any cryptocurrency that you are interested in following. Like every stream, I show the Ethereum Hashrate chart. Oh, geez, right here. So this is something that we're paying attention to because Ethereum is the biggest driver for GPU profitability, at least the difficulty is, and Ethereum price. So when this goes down, we generally can earn more Ethereum, or we can earn other coins. Everything loosens up. There's enough big farms out there doing the profit switching, profit boost, that one coin can kind of give us an idea about how the general health of the entire GPU mining market is. So this continued to fall up until beginning of April, and we're starting to see it to bubble a little bit, but not too much. We're not seeing too much movement here. So I think we're going to hover around here for a while, and then this is going to change if and when ProgPow comes out, but I think we're going to hover around here for a while unless we start to see some price movement back up. Then the people that should have been buying rigs now are going to be scrambling for the whole process will repeat itself. So those that kind of hung tough during the bear market, I think, are going to be rewarded. And this is a chart that explains that pretty well from a mining perspective about difficulty. All right. Another update on just ProgPow in general. So we've got, I think there hasn't really been too much. There's an audit in place. I think the last live stream I talked about how you can donate to the Ethereum cat herders. And you can donate there to get the audit done. There's been talk that they're going to put ProgPow in there even without an audit because there's enough experienced and trained eyes that are looking at the code and seeing it as sound, but the audit is just an extra precaution. And almost every wallet that I've seen, node implementation, miners themselves, everyone's implementing ProgPow into the infrastructure because Ethereum is a centralized product. So there's so many different parts of it that need to be updated by so many different companies because there's different implementations. It's written in different languages. Everyone seems to be implementing ProgPow as if it's going to happen, which I think is a pretty telling sign that the community wants it. And actually the most resistant people I think are the devs, but they're not even resisting it. It's just a matter of fitting it into their schedule of getting into proof of stake. No one wants it to delay proof of stake, which is totally makes sense. But I really do think that we're going to see ProgPow in October with the next hard fork. So this is the meeting agenda for the next in 3 days for the Ethereum devs, and of course we'll post on the next live stream in 2 weeks. I'll post the notes from what occurred on the Ethereum dev meetings. So on the notes rather. So we see the ProgPow audit update right there, and they're going to talk about what have we learned, how far along is the audit, what have we learned from the audit. I don't think that the audit's been completed. I don't know what the funding level is for the audit, but we're going to get more answers on that in 3 days. So something to keep an eye on with Ethereum. I think Ethereum, again, is the most important coin to be watching if you're into the GPU mining market, and ProgPow is the most important EIP or Ethereum improvement proposal that you should be paying attention to as a GPU miner. So definitely keep an eye on that. We'll talk about it next live stream, but this is going to have a meeting in 3 days. So we'll talk about what we're currently mining. I break this out into two groups. There's the AMD miners, and then there's the NVIDIA miners. So we can see what we've been mining over the last 30 days, and it looks like we'll start with the AMD miner, which is right here to the left. I just pulled up a random miner last 30 days. It's making about $3 a day, mostly mining Ethereum at 95% of the time. Sometimes it drops to Kryptonite, which is the Monero, and that's it. I'm not seeing too much activity on the AMDs. It's NVIDIA is just outperforming them on almost everything on a hash per watt basis. So we're not seeing too much activity with AMD. So this could change with ProgPow. This could change with, let's say, maybe there's another popular coin that has a Kryptonite algorithm. There's lots of things that can change where AMD may become king again. It really just depends on what coin is most popular. But it seems to me like the NVIDIA architecture is just getting to be better than AMD's. Like that company is pulling ahead in terms of performance. So we'll see. We'll kind of monitor this as we go, for sure. And then we can look at the NVIDIA side of things. All right. So this is the NVIDIA side of things. You can see there's a lot more activity going on. This last 30 days, the 1070, which is the Force 2.0 model, is making around a little over $4 a day. You can see we're mining X16R, which is Ravencoin. We're mining MTP, which is Zcoin. We're mining Kuckaroot 29, which is GRIN, and then barely mining Equihash, which is Bitcoin Gold, and Neoscrypt, which is Feathercoin. So this is kind of the activity that's happening on Profit Boost. And you can kind of track this if you're following your panel in real time, or, what it switches to mining to and all that. So, and then you can see what pool it's on. Most of the time, these are on NiceHash, almost exclusively on NiceHash, and then on the AMDs, it's actually almost exclusively a mining pool hub. So that really is going to depend on or what rig you have is going to dictate how you're paid. Because if you're on NiceHash, you're going to end up getting the Bitcoin, and if you're on mining pool hub, you're going to get that preferential payout token that you chose at the beginning of your contract. So this is what we've mined in the last 30 days. I can send you this information upon request if you want your specific rig information. We track this. I think we implemented it like 6-7 months ago, so I can go back all the way then and give you all of that data if you're interested to watch your uptime, your average money made per day, all of that stuff I can get for you. We track it all internally. All right. So, okay, two topics I really wanted to get into on the stream. First one is something that happened to me last week, and basically I was a victim of a very sophisticated SIM spoofing attack. It's where somebody was able to trick my cell carrier's network into thinking that they had my cell phone. They basically changed the SIM card or the IMEI, whatever the identifier is. With this, I'm not as learned on how cell carriers track all of these things, but I've heard of this happening before, and it's a very crypto-specific thing, where basically they've tricked my carrier into thinking they have my phone, basically. So I got off a flight, my phone was not working, it wasn't even looking for service. I thought that was odd, I'm fiddling with the network settings, like restarting it, with all the basic stuff I think you would do if something was wrong with your phone, and realized that, I'm not even searching for data. I'm not even searching for a tower. So that's interesting. So basically what happened to me was right here. So there's a TechCrunch article about it. Hackers can steal your SIM, and they go after your cryptocurrency. So I was able to connect to the Seattle Wi-Fi, where I got this wonderful, basically this on my phone. Security alert, someone's hacking your emails. Security alert, someone's hacking your emails. Hey, someone's trying to get into an exchange. Oh, and then, after they change my password for my email, I'm locked out of the email. I can't see what's happening anymore. I go in to try to reset my password. They can just use my phone number and trump me. So basically, I feel incredibly powerless. I'm unable to do anything. I kind of go into a panic. I'm in Seattle. There's really nothing I can do. So I was eventually able to call AT&T and turn off my cell phone number, and I was able to deactivate my email. So if you guys don't have a backup way with your emails outside of your number to be able to turn things off, and if you have a corporate account, you can have somebody else in the corporation turn off your email, definitely think about that, because if someone takes your number, they essentially take your digital identity, and there's a lot of damage that they can do. But what I do recommend is not so 2S. So there's a thing called 2FA, which I've talked about, and I'm sure anyone who holds crypto should be aware of at least. It's a two-factor authentication. Basically, it's going to want an email and password, and then it's going to want to verify that you are you through another device, which is usually your cell phone number. And they'll text you a code, and you put in the code to make sure that you're you. I think Chase Bank even does it. There's a lot of different. It's just an extra layer of security. However, if you have it tied to your number and someone takes your number through the SIM spoofing that's becoming more and more prevalent, well, then they can start to get into things, because that's the second layer of identification. So, yeah, I actually have it right here. Where is it? Yeah. Nope, that's not it. No, where did I put it? Oh. Yeah, but it's right. I thought I had it right here. So this is what we use to avoid using your number, because your number can get spoofed. This is actually tied to your device, and it takes days to migrate to another device. So it's really important that you use Authy or you use Google Authenticator, which really saved my butt in this situation. And this is a way to track your basically have that two-factor authentication be tied to your device and not your number. So we, as a company, we use Authy, and all of our exchanges had used Authy, except I had one exchange that I did not have any second layer security on. However, the exchange flagged a weird IP address, just cleaning out my accounts and stopped it. So thank you. That was Poloniex that did that for me. So definitely, if you're keeping your money in an exchange, It is a centralized honeypot. Your number is an attack vector, and do everything that you can using this app and my experience to try to keep control and keep your funds safe. It's very important that I wanted to make sure that we touched on that. All right, moving on. Let's see here. So the next thing I wanted to talk about was just the buzzword of decentralization. So everyone, this word is overused ad nauseum, I think, in the crypto space, and it's I don't. A lot of people, I think, they just throw the word out. Throw the word out. Decentralized. It's like a sexy word, and I don't think a lot of people really know what it means. And I think it has a lot of different meanings within the crypto space, especially if you get into particular like blockchain specific politics. But I'll go into kind of what it means to me, and I'm going to kind of pull from Vitalik's blog post that he wrote a few years ago, but called "The Meaning of Decentralization," which I actually stumbled upon. I had written it, I had read it a number of years ago, but I rediscovered it recently when I was trying to prepare for this blog post. So. He actually has three different types of decentralization. I only really like to touch on two too much, because the logical isn't. He gets into some things that you guys can read about, and I'll put the show notes page for this as well. But basically, for me, it means two things. It means security within cryptocurrencies, because in a blockchain type environment, the more centralized any aspect of that blockchain is that becomes an attack vector. And secondly, it's about political decentralization. So removing power from those at the top and distributing it amongst as many people as possible. So let's basically talk about the first one, which is the security in cryptocurrencies. So any type of centralization is an attack vector, like an exchange, like the ones that you may use your two-factor authentication to protect yourself from. Banks like a Coinbase, or like an actual bank like Chase. But within the crypto sphere, hashing pools, large staking majorities like we see with EOS. It's These are all basically attack vectors that have decentralization points have naturally occurred over while crypto has been developing, but there's been a lot of development to try to keep even those centralizing aspects that have occurred through the market, keep those decentralized and write tools to keep those decentralized. And the first one is the Binance DEX. So this is what's called a decentralized exchange, where you actually you don't send Binance your funds, you send it to a wallet that you control and you have the seed words to recover, but you are able to trade cryptocurrencies. So there's been some argument about whether or not this is actually a DEX, but the fact that you control your keys and you're able to trade without relying on a third party to actually hold your funds, this is the first step towards moving away from these kinds of centralized honeypot attack vectors that we see within cryptocurrency. Because the more crypto in one spot, the more dangerous that becomes. And that's not just a blockchain specific thing. This is centralized institutions like banks and even retail basically store all your credit card information, and a big sizable pot of credit card information can be hacked, and like you can lose all that information. I still find it very, very silly that there are all of your numbers to steal your money essentially are on your credit cards. At least with a debit card, you have to have a PIN, but credit cards are just they're all written on there. So cryptocurrencies evolved on a very basic premise of having a private and public key to be able to spend money, whereas your credit card is just all your keys are just written on that piece of plastic. So if you lose that piece of plastic, you gotta go through the steps. But you can see how many breaches have occurred. There's Quora breach, Marriott Starwood, Facebook, T-Mobile, Panera, Saks Fifth Avenue. It goes on and on and on. And this is certainly not an exhaustive list, but this is some of the big ones that have occurred. So for every cryptocurrency hack that I'm sure you heard of, those same methods and tools are being used to hack legacy financial systems. But with the difference being is that the legacy financial systems require centralization to function, for reasons I'll get into in a minute, whereas the blockchain space is actively trying to decentralize and mitigate any of these hacks that may occur by having fewer people affected or fewer funds affected, fewer institutions affected, because there's not these natural honeypots occurring by nature of how that system is forced to run. So basically, the current system is about centralization because centralization is necessary to create a trusted medium of exchange. Like you need that bank to be there because if you walk into a store and you give them a piece of plastic, that merchant doesn't trust you. They trust Visa or they trust whatever that bank's debit card is associated with, and they trust, and that's just how it's always been our whole lives since banks existed. The merchants trust the banks. So Bitcoin basically eliminates the need for that trust, builds it right into the protocol itself, and then adds a bunch of different political rules and different, like Vitalik talked about, decentralizing, or rather, it adds a lot of different. It minimizes all these different attack vectors through nature of the protocol, and then forces and then divides up the political power as well. So you don't have one institution, you don't have one bank, you don't have one Federal Reserve, you don't have one government determining how many of these dollars there are, and you need to trust these institutions in order to participate. It's basically a distributed version of money without these top-down kind of institutions dictating certain things. So um, let's see, centralization is security. Let's see. So I just kind of went on a rant there, and I had notes here, but I'm kind of all over the place. So if I'm losing you, of course you guys can chat in here as well. So basically, Bitcoin has its own set of rules. And there's thousands of cryptocurrencies now, and you can choose to participate in whichever ones you want. So I think right there is you got options. So if you don't like the inflation rate of Bitcoin, you can hop to another coin. You can go to Ethereum. Maybe their inflation rate is different. You can go to Vertcoin, whatever you want to use. You're not geographically locked in to a money system that you have no control over. So I think that's the first thing. So let's look through this real quick, just so I can catch my bearings. So the current system. So this is a political power, the most centralized project. Yeah, I think it's EOS personally. I'm inherently distrusting of a project where they are proof of stake from the beginning, because you just think about where the money goes and where the money comes from. In a completely proof of stake system, the only way to make money is by having the money to begin with. So they have an ICO. They sell a couple tokens to the guys that were paying attention during those few months that they announced it, and then it's just literally that group gets richer, and you can buy in or not. So there's a massive amounts of money just centralized in the middle. At least with a proof of work system, let's take GRIN for example, where there was no pre-mine. You can jump, pop your GPU to start mining it, and there's new coins being created that don't require a buy-in, and there's the distribution of processing power over the globe is far more distributed than any coin when it launches. So you immediately have the opportunity to jump in just by nature of having any processor of participating in that coin. So proof of work, the biggest advantage that proof of work has is its distribution. Um, you could argue potentially that proof of stake may have more security, but not without a distributed group of people doing the staking. So you have to have a proof of work, at least in the beginning phases. And I would say Ethereum, what is it, 29? Ethereum will be proof of work for about 5 years next year. So by the time they go to proof of stake, they'll probably be proof of work for 6-7 years. I think I'm being optimistic there, honestly. So you have a distributed number of people, at least more so than let's say EOS or these proof of stake coins. And that once you have a decentralized group of staking, that decentralizes the political power, because Ethereum basically is going to have, instead of hash-based voting, it's going to have Ethereum-based voting. You can vote with your money. Not by necessarily spending your money, but you cast votes, and the number of votes that you have is based on how much money you have. Because there's no more hashing power, there's no more hash wars. With Bitcoin, we had the Bitcoin Cash split over SegWit 2x, and people had to vote. Hash rate had to be the determining factor. We can get into user-activated soft fork and things like that, but hash rate is the determining factor about what or does not get voted in politically in a proof of work blockchain. So once you go away from that, it's suddenly who has the most money. And without a distribution period, it's might is right. Whoever has the most money will win the day. And that's not, I think, a good way to run a blockchain or to start a blockchain. So any cryptocurrency that's proof of stake from the beginning, I'm very, very distrustful of from the get-go. Great question. So let's see if I can kind of catch my bearing here with this again. So basically, the current system is top-down. Federal Reserve prints money. They determine that the economy needs 4% inflation, 3% inflation, but we don't get a say in that. In fact, political system doesn't really get a say in that either. For better or worse. I mean, I don't really think it would make it better anyway. But the governments can print money at will via inflation. And the academic argument is that a steady inflation will lead to a steady dollar, and then we'll keep things stable. But the net result is that it slowly whittles away our wealth. So actually, Roger Ver recently tweeted, "Government uses inflation to steal your wealth." I don't know if anyone is familiar with Roger Ver, but he is very anti, especially the American government. But he's got a point here. I mean, back in 1932, you could buy almost 500 gallons of gas with 20 bucks. Now you can buy seven. The product hasn't changed. It's just how much is our money worth has changed quite dramatically. So this is a great example of governments slowly whittling away the money of the people, and the argument is that inflation is a hidden tax. So when there's really nothing that we can do about this. In addition to that, we have to trust banks and we have to trust governments with our money because there's really no other way to transact with someone that you can't see or that's not in front of you. So in order to transact over the internet, for example, you have to trust these institutions, these banks, these governments, these payment processors, and they actually have all the money. And those who have all the money have all the power, especially if we get into fractional reserve banking and all that. So, but the argument then is this is more efficient. I don't think there's an argument. You're not going to get an argument from me that cryptocurrency is more efficient. It's not. It trades efficiency for trust. So I don't need to trust anybody, but the lack of efficiency is what creates trust just within the protocol itself. So I would argue then that in a new decentralized system, this is going to spread out the political power away from top-down governments and banks. They're going to move. They're going to at least that lever where they can print money is going to be combated with Bitcoin, a lot like how gold acts today. Except I think Bitcoin has a use case where it can be traded internationally without permission for cents on the dollar to move potentially trillions of dollars, billions of dollars. So I think it's going to be a little bit harder for a government to start to inflate away its currency and not damage its populace much quicker in a system where Bitcoin is more prevalently traded and has more of a presence in the global stage. It also keeps money in the hands of those who own it. It doesn't keep it in banks and intermediaries. It's not geographically tied to the currency. I think I touched on this earlier. It's not geographically tied to the currency that the government forces you to use. So you have a choice about what currency you want to use. At least within the current crypto space, there's thousands of them. No trust needed. That trust is replaced by the political system of that blockchain. With Bitcoin, you have to convince 51% of the miners that your fraudulent transaction is real, and it costs an ungodly amount of money to do that. That's where decentralization matters. If you're tricking the entire network, not just the distribution of funds for honeypots, but also politically, you can't trick the entire network into thinking something isn't so without a majority of the hash power, or in a proof of stake network, 51% of the staking community. And it is less efficient, but there are fewer attack vectors, and it keeps wealth in the hands of the people who own it and removes these intermediaries. And I think all of these things are just well worth the trade by a wide margin. You lose that efficiency. You can still use centralized banks, exchanges. They can exist within the system, but if you do not want to, then you do not have to, and that's really important. So let's see, I actually didn't use a lot of these other ones. So I want to plug Pomp here. It's great. He's the co-founder and partner at Morgan Creek Digital, and he writes a daily letter, and he does a podcast. I'm starting to get into his stuff. He's a really cool guy. Definitely recommend that you guys check him out. Let's see. Yeah, so right here, it's called Off the Chain. I'll put the link here in the show notes as well. I wanted to get into the big bank bailout. So this is basically an example of a centralized top-down kind of authority where the banks ask the government for money and the government is the taxpayers because they gambled away um, all the funds that they were in charge of. So this couldn't happen in a Bitcoin regulated world. You couldn't do fractional reserve lending, and you certainly couldn't ask a bank to bail you out and have the, or I'm sorry, ask the government to bail you out, or the government could potentially print $16.8 trillion and try to save the banks. So just, I guess it's just a different perspective, a different, where I'm coming from is I just don't understand how these nations can trade against each other and continue to inflate their currency, continue to go into debt. I think I think gold's going to skyrocket in price because it's the only thing that's tied to um, real value anymore. When it comes to fiat, and I think Bitcoin's going to play a big role because I think it's shown that it's resilient, and I think it's shown that it's resilient, and I think it shows that it works as a payment network, a global payment network, which is something gold can't do. You can't ship massive amounts of gold around the world without paying an ungodly amount of money. But Bitcoin is, a snap of a finger. Um, that's just what I believe the role of blockchains will have in the coming years. That's why we've set up Bit Capital Group to give you a piece of the mining pie. And I strongly believe that Bitcoin is going to play a major role in interfacing and eventually replacing the legacy financial system, legacy stock markets, and create a far less frictionless global network where each individual government is going to lose a little bit of sovereignty in how it handles its finances in return for a little bit more fair playing field for all the people that exist. So, uh, and BitCrep is my way to participate and get as many people to participate as possible into this conversion to the new system. So, sorry, that was a bit of a rant, but I think I see some comments in the chat here. Let's see. Thoughts on the consensus platform that Ripple's system utilizes. So I'm gonna be honest. Yeah, I think Jimmy's right. EOS and Ripple, I think, are in the same boat. I think XRP is a worse offender. Now, I'll be the first one to say I haven't paid attention to what anything Ripple's done over the past year and a half. But the premise of it was simple. They have, well, first off, they have this currency and then they have their company, and their company can basically create as many Ripple as they want on a whim and send it to any new bank that wants to enter into their ecosystem. And that's the incentive to try to get banks to join the Ripple network. Um, that's it. I mean, I stopped reading there. Um, I'm not a fan of Ripple. It's not a real cryptocurrency. It's using blockchain technology, I guess it is, but there's no decentralizing aspect about it at all. So it's a blockchain. It's not a cryptocurrency, and I think you can use that. You can have that, but it's a bank chain. It's just another tool. It's basically a faster way to do Swift. That's it. And I think they just jumped on the cryptocurrency hype train and made a token because they can get funding easily that way. Like a lot of ICOs do that. So I really don't. I've never owned any XRP. I've downloaded their program and ran it. I don't get it. First off, I think the cryptocurrency space in general is such a massive leap forward that taking such a tiny toddler step into Ripple is missing the point and does the technology a disservice if that's the one that actually gets adopted. And I think it's not going to. Let's take a look just in today's. Not that this means anything, but that's XRP against Bitcoin today. Not a big fan. Again, and I have a more nuanced position than most when it comes to cryptocurrency, and I'm a proof of work guy. I have been a proof of work guy. I think proof of work is just better than proof of stake. It's not necessarily about efficiency. It's about decentralization, whether it be decentralization of political power or whether it be decentralization of security. And I think in a pure proof of stake model, both of those things are attack vectors. In a proof of work model, some of them certainly have hashing pools that control majority of hash rate on some coins. You have Bitmain, for example. This is why I'm anti-ASIC. You have Bitmain, for example, monopolizing the hash rate on Bitcoin. So it's certainly not perfect, but it's all about distribution. With a wider number of people participating, the safer the network is, period. Yeah, right. So I think Ethereum is there's so many things that you can do built on top of Ethereum, and Ethereum is decentralized to the point where you can have JPM coin, you can have XRP run on Ethereum, and Ethereum's a public, blockchain, so anyone can do anything on it. So I also don't really I'm not really a big fan of the enterprise version of Ethereum where you have all these private companies building things on top of it. I'm thinking and hoping that that's just going to end up being basically a big test network for people to roll out their stuff on, and then they can pull it out on the actual public chain. That makes sense to me. They don't want to they don't want to put smart contracts on the main Ethereum chain. Why not put it on a private chain with 100,000 other companies and have everyone try to hack each other's stuff? Just makes more sense. Um, but the public chain is what's important. That anyone can participate with just a processor, um, which is far more widely distributed than just having to buy in to a coin. So again, it's about distribution. Distribution brings about security, and distribution brings about the decentralization of political power. So that's kind of all I had. I don't know how long I've been on. Tells me somewhere. Well, 52 minutes? No, I think I started like 20 minutes early. So with that, I'll sign off. We'll post this to the Twitch channel, and we will have the next one in 2 weeks. We'll do it on a Tuesday on, let me check the date, the 7th. It's my sister's birthday. So we'll have another live stream in 2 weeks, same time on the 7th, and I'll send everyone an email, and we'll go from there. You have a lot of things you want to discuss? Oh, well, I'll end the recording, and then we can keep talking. So tune in 2 weeks, guys.